Welcome back to the channel, everyone. Today I want to talk about whether the shorts actually have enough money to pay for the squeeze, if the Fed and the SEC will need to be involved, or if they'll have to halt trading entirely and work out a settlement figure. So stay tuned and let's make some money. Again, before I dive in with the key information, this is another video in my quickfire Q&A series. If you have any AMC or GameStop questions, be sure to leave them down in the comments below and I'll answer them in an upcoming video. And now I want to dive straight in with the key information. So, we know there's a number of different funds currently shorting AMC. We know that many of these funds are vastly underwater in their position, and they've created so many synthetic shorts, they can't actually cover all of these shorts without bankrupting their funds. At the moment, they're basically being kept on the hook by the DTCC and the Fed, and they're hoping that everybody forgets about AMC and GameStop, and they're hoping the squeeze never happens. But obviously, as I've explained in many of my previous videos, people aren't just going to forget about AMC and GameStop. The market is continuing to crash and therefore those margin calls are approaching closer and closer. Not only that, but the SEC and the Department of Justice is performing their investigation and getting closer and closer and closer. We're already now starting to see hedge funds being disconnected. We're seeing the SEC investigating personal mobile phone usage and much, much more. And when AMC squeezes, it's likely that these few individual funds that have created all of the mess won't have enough money to buy back those AMC shares and close out of those synthetic short positions. But obviously all of these individual funds are members of the DTCC, and when one DTCC member ends up going bankrupt, the other members in the DTCC are responsible for their liabilities. Therefore, if a fund like Citadel ends up going bankrupt but doesn't have the cash outlay to cover and to close all of their open positions, other members of the DTCC, like Bank of America or another hedge fund, will have to cover Citadel's liability. And therefore, when AMC, GameStop and the other meme stocks squeeze to unimaginable new highs, it's likely that all of the members of the DTCC will basically have to backstop these few funds that have caused all of the mess. Now, you'll have seen this extract from many of my previous videos that says its depository provides custody and asset servicing for securities issued from 170 countries and territories, valued at $63 trillion. That basically means the DTCC provides custody and holds assets worth $63 trillion. Now, a lot of people refer to this as the 63 trillion DTCC insurance policy, but it's important to note the DTCC itself doesn't hold this $63 trillion. This is basically the asset base of all of the members inside the DTCC. So therefore, if you take the assets from Bank of America, JP Morgan, from Citadel, from BlackRock, Vanguard, and all of the other funds that make up the DTCC, you get to this $63 trillion position. Now, something very interesting that I found is that this $63 trillion number is actually the 2019 figure. This has been secretly updated that I don't really think anyone has taken too much notice of. And guys, if you haven't already, be sure to sign up to BlockFi using the link in the description below to get up to $250 in free Bitcoin. With BlockFi, you can trade tons of different cryptocurrencies like Solana, like Doge, like Avalanche, Matic, Mana or Decentraland, Sand or Sandbox, and many others. And that's why more than 500,000 people in 350 institutions globally use BlockFi. BlockFi is also an entirely free platform that requires no minimum balance. BlockFi also offer a reward credit card with an introductory rate of 3.5% cashback when you're spending. From the DTCC website, the DTC now manages $87.1 trillion. I guess due to the massive increase seen in the market in 2020 and 2021 and all of this additional cash printed by the Fed, obviously these US institutions have grown significantly. But I suppose in the long run, or in terms of the AMC squeeze, this is beneficial for us because it now means these members of the DTCC now have even more money. I think it's also important to think about just how much money has been printed over the last few years. Obviously, at the moment, we're currently entering a recession, and the Fed is likely to print even more money to help save the US from a recession or help save these banks from an AMC squeeze. As of February 2020, pre-pandemic, the Fed had printed around $15.4 trillion, or the M2 monetary supply was $15.4 trillion. That's now increased to nearly $22 trillion, which is an increase of $7 trillion. Now that means in terms of cash available to actually pay for the squeeze, we've got this new $87 trillion of cash managed by the DTCC, or cash managed by the members of the DTCC. If additional cash was needed, it wouldn't be beyond the Fed to print more money. Recently we've seen them print $7 trillion, but back in 2008 the Fed actually printed $30 trillion. And therefore I don't think it would be unreasonable for the Fed to print somewhere between $7 and $30 trillion in extra cash if needed for the AMC, GameStop and other meme stock squeezes. Now you may say, Tom, okay, the Fed and the DTCC have somewhere between $94 trillion and $120 trillion to pay for all of the squeezes. But saying that, all of that $94 to $120 trillion would basically bankrupt the US if they did have to pay for the squeeze, and every single American would lose their savings. Obviously, don't forget, including this $94 trillion is all of the assets held inside JP Morgan, Bank of America, and all of those other mainstream banks. Therefore, genuine American people's savings will potentially be used to pay for the squeeze. Therefore, could the SEC and the Fed step in somewhere before then and basically halt all trading and force a settlement price? Now, I think that's a topic for another video, and I basically wanted to talk about what kind of price AMC could see if every single penny available was used to pay for the squeeze. Now again, I think it's also important to factor in that it's not just AMC that's going to squeeze. GameStop is also going to squeeze, and the entire meme stock basket is likely to squeeze alongside. Now we know that AMC has around 500 million legally issued shares, but we also know that AMC has a significant number of synthetics. Some estimate maybe it's only 100 million synthetics, maybe some people think there's 0 synthetics, some people like me think there's around 2 billion, but some people think there's even more, maybe 20 to even 50 billion synthetics. Now we also know that GameStop has synthetics as well. I personally don't know how many synthetics there are for GameStop, but let's assume there's somewhat similar amounts, and there's around 2 billion GameStop synthetics as well. I assume the majority of the GameStop synthetics would have been created before GameStop ran up back in January of 2021, and therefore there's probably a somewhat similar amount to the amount we see in AMC. And again, we also know there's an entire basket of heavily shorted stocks or heavily shorted meme stocks. It's likely that each of these also have their own synthetic shares, although it's probably not as many as AMC and GameStop, as these are the two main meme stocks. Therefore, I'm going to assume for the entire basket of other meme stocks, there's around 2 billion total synthetics for all of those other stocks. Therefore, based on my assumption, there's 6 billion total synthetic shares floating around in the market right now. Part of what makes these videos difficult to make is the amount of unknowns. Obviously, I don't know just how many synthetic shares actually exist because I haven't spoken to Ken Griffin and asked him how many he's created. Even if I had spoken to Ken Griffin, I'm sure he wouldn't tell me how many synthetics have been created because it's illegal to do so. This number could be way higher than 6 billion, but it could also be way lower. I think 6 billion is a somewhat fair assumption, and I think it's somewhat fair to assume 2 billion AMC synthetics. Now, if you take the lower end of that spectrum of $94 trillion available, divide that by 6 billion shares, that gives you a price of $15,000 per share for each of those individual stocks. Now, I think it's also important to remember that this isn't $15,000 as a peak, this is $15,000 as a geometric mean. Because obviously not everybody's going to be selling their shares at exactly $15,000 per share. Many are going to sell before that number, and many are going to sell after that number. And therefore $15,000 is the potential geometric mean. Now, I've spoken about the geometric mean before in this channel, and it basically looks somewhat like this, which again is similar to how the AMC squeeze will look. You're going to have lots of people selling down here before the squeeze or just as the squeeze gets started. You're going to have lots of people selling here after the squeeze, and you're going to have lots of people selling during the squeeze and at the very tippy top. And therefore the geometric mean basically calculates the somewhat average price throughout this entire squeeze chart. So this chart here actually uses a simulation that peaks at $1 million per share, and the geometric mean number for that chart is $11,000. That basically means that if AMC or GameStop peak at $1 million per share, the average price is only $11,000 per share. So if I've calculated an average price of $15,000 per share, that means the peak for AMC at the peak tippy top of the squeeze could potentially be over $1 million per share. Now again, that's only if every single penny available to the DTCC and the Fed was used to pay for the squeeze, effectively bankrupting the United States. Every single person in the United States would lose their savings, but every single person holding AMC could potentially sell their shares for over $1 million per share, with an average geometric mean of $15,000 per share. Now, as I said, I do plan on explaining in other videos if the SEC and the Fed are likely to get involved and basically force a settlement price. But I think this video proves that these unimaginable highs of over $1 million per share are actually possible. And even if AMC did reach over $1 million per share, technically the DTCC and the Fed does have the cash to cover it. Yes, obviously it would involve bankrupting the United States and printing trillions and trillions of new dollars or new money, but it would be viable. However, I do think the SEC and the Fed is likely to get involved before this level because they wouldn't want to risk bankrupting the US and risking every single American losing their savings. I personally think the shorts will have enough money to pay for the squeeze, but we may not see peak prices of over $1 million per share because that would bankrupt the economy. But hopefully it's helped explain that actually, yes, the shorts do have enough money to pay for the squeeze, even if nobody got involved, and even if we saw $1 million plus per share. So guys, be sure to leave a comment down below and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.